Alrighty, good evening, everyone. Welcome to the Hurley Investments Market View Commentary for Monday, the 9th of September. We've got a kind of a small group, 13 of us here tonight. Let's start out to let's see here. Well, let me just ask a question. So what do you do when you don't know what to do? Go ahead and let me know. What do you do when you don't know what to do? I'm giving you guys a chance because I'm going to tell you what I see in a minute. Okay, interesting. I take a flying leap. Come on. Flying leap off a very deep cliff. So you jump off the cliff. Is that what I'm getting? My best guess or ask for help. Lee. Do what Fast Money is doing, which is really CNBC, right? David. Day trade and lose my ass. Dave. You know what? That's an interesting way to say it. I go to one of my many newsletters and copy a trade. Mary, I appreciate you being honest. That sometimes is a tough one. Jeff, Tom, Steve, AD, Stefan or Steven, any other ideas? Any other ideas on what you do? Anything else you'd like to say? Okay, then. So let me ask the next question. How would you feel if I was doing one of these above mentioned things while trading your money? How would you feel if I was doing one of those above mentioned things while I was trading your money? I knew it. I would kill you from Lance. Better answer, thank you. I would expect better from Lee. And I would expect you to do more than follow someone else. And that's from Mary. So the reason why I'm asking those things comes down to my learning part. Why is it okay for you to do that, but not me? Why is it okay for you to do that, but not me? Lance, that's exactly what I was expecting. Another good answer. It's the best I know, so I hire you. So what Lee's trying to say is, Kevin, you're the expert. Or at least you're supposed to be, right? So good. I'm asking this because in all honesty, do you think I run into times when I don't know what to do? Yeah, of course I do. That was 3 yeses that I've seen the quickest ever. Of course I run into times when I don't know what to do. So some of you have been with me for years, right? Bill, nice to see you here tonight. It's been a while since I've seen you. So what do I do? The expert, right? When I don't know what to do. It's impossible to know what the market will do every time, so you try to fix your bugs. Okay? So I will say I do try to learn from losing positions. I don't call them mistakes because I make the best possible decision with the information I have in front of me. So they're not mistakes. And Lee's known me for forever, right? Yes, I do try to fix the bugs. And this could be adjusting, looking over the decision making process. Man, I really need to work on typing, huh? Any other comments? Because no one's hit yet what I do. What do I do when I don't know what to do? I've probably said it at least a dozen times for some of you here. What do I do when I don't know what to do? So Lance, I want you to go back to June. And particularly, I want you to think of Apple. And Bill, you've been here. This is the first time I've been here for a while, but we recently spoke July, beginning of July, end of June. And that was primarily on Ford. So, Mr. Gould, take a peek at that one. There you guys go. I sit on my hands, or most likely will do nothing. You're exactly correct. If I don't have the information to make an educated decision, It doesn't make sense for me to go placing trades in your account. How often have you told me, the toughest thing to do in the world is to sit on your hands? It is. It's ridiculously tough. Yet that's what I do. I do one of the hardest things it is to do. I sit on my hands. Now, most recently, we had an earnings options expiration. And someone just typed a question in. Analyzing due diligence and sit back and be patient. Perfectly said. Analyzing due diligence, then sit back and be patient. That actually is better said than I say. I tell people I sit on my hands because I'll be honest with you, sometimes I got to nail these hands to the chair. Sometimes I'm so itching to do something that I just, it's tough. It is ridiculously tough to sit back and do nothing. But that's what I feel I have to do at times. So with that said, most recently we came into an options expiration. And I want to spend a little bit of time on some of the decisions because I know some of you have scratched your head and said, really? Really? That's what you're going to do? And I want to see if you like how it's turned out. So we took off 210, Apple 210 covered calls for about a $2 profit. We had like 640. We took them off for 440. In fact, I bet we probably have the history. Let's go to the last 30 days. So, not what I'm looking for. Alrighty. So, we took off some Apple short calls at 210 for roughly a $2.10 to $2.20 profit. And then for what? Last week and the week before, so for about 2 weeks, we've run Apple without those covered calls, which we just put new ones on today. Some of you that are being called out on covered calls have other calls in place. Some of you that if it gets above 225 will have some leaps put into place. So the short answer is we ran some stocks without protection because we didn't want to risk being called out. And now we just put on a little bit of protection that's roughly 1% that's going to match something I'm going to show you here a little bit later. Profitable by $4 plus the $2 of credit we took since we did that. AOBC. This is an interesting one. We took some off for a profit. We're making an adjustment on the other one and doing some 9-8 covered calls. But some of us that were in caller trades booked a profit. We booked a profit off of leap calls, and we've done so a couple different times. All right, I'm trying to find account history, trying to find where we're at with this one really quickly. AOBC. Boy, I probably should have had this better done, huh? I wonder, I took the last 30 days. I wonder if I can download it. Give me a quick second here, guys. Come on. All righty. So, of course, that's just Apple. Hold on one second. I'm going to see if I can get this the way I want it to get it. Go accounts. History. Want to reset all. Last 30 days. See if this will make it a little bit easier for me to show you. Okay. So let's find some dates and let's work it to AOBC. AOBC. Call, where's the cash it in? Sold to close. So that was the most recent one. $20, 9.5. So pretty interesting. Let's go to AOBC. We look at a chart. August expirations expired. And they went through their earnings and it was pretty awful. But they're basically expiring. So we added more shares, put on another put a long put, and then right down here at about $6. In fact, I can tell you exactly where it was at. We bought more shares at $6.13. And we took profits off of our 750 puts, and before that we took profits off of our like $10 or $12 puts. Which means since the 5th, I've had no protection on AOBC. Yeah, it's pretty flat. It's only up 9 cents. But I can let AOBC run off of the bottom. Let's see if I can find a better one. Let's go to Ford. Ford. I've got 4,200 shares. And if I go back to what I was doing with Ford, let's find Ford. Ford might even be farther back. I've let this go for a little bit. Apple, AMG, Ford, cash dividend, AMD, Disney, Visa. Where's Ford? Wow, Ford goes back a while. All right, I'm back. Sorry about that. Can you guys hear me? Someone type something in so I know that I'm back. There we go. All righty. Sorry about that. That was on my side. All right, Ford. So let's go to 6 months. Let's go to 3 months. 3 months. So on August 19th, right here, I added shares on Ford. This is Under Armour. We're trying to get to Ford. So let's do this again. So right here, I ended up taking the protection off of Ford and adding protection on Ford. If I look at that one, that's about $9.06, which means for a week and a half, we went down. And then we've bounced back up. Pretty good to be up over 5% on Ford by playing a support level. I could have always added more protection on if we needed to, but we chose not to. Under Armour. We most recently took some protection off on Under Armour at $20, and we added shares previously, added quite a bit of shares of Under Armour, probably back there at that same time frame on the 19th. So that was options expiration. 400 of FCX. Where was Under Armour at? Some Disney's been added in. Boy, I don't have it here offhand, but we can take a quick peek and look. Under Armour, 20,000 shares. Bet I could find it a little bit easier going to do the history. Last 30 days. Under Armour. And so it looks like on the 5th, when we did some there, on the 13th, 14th. The short answer is looking at a chart on Under Armour. We added some shares in this price range and some shares in this price range, which means some had 2 weeks and some had 3 days, but we allowed a stock to come up from off the bottom and up around that $17, $18 range. There again are times when I don't know what's going to happen and when we'll throw some protection right back on. But if I don't know what's happening, I'm not going to randomly just start putting positions on for you. Also, if I am wrong, we can always add protection back on. And right now, I think we're running Baidu without protection. Bank of America, we've taken protection on and off. Disney, do I have Disney on? I think I had protection on and off on Disney. FCX, I was wrong. Got protection back on that bad boy. What a bugger FCX has been. So all I'm trying to show you and all I'm trying to say is that when I don't know what's happening, I'm not going to randomly just pick a newsletter and throw trades on for you. I will sit on my hands and do nothing. And for some of you have thought, oh my gosh, you've taken off protectionless volatility and you didn't put it back on everything but one stock that I can think of. We've taken our protection off, not put it back on, and had it turn out profitable for us. Because of that, I am pretty much in good shape and okay where accounts are standing right now. It might be really good. It might be amazing that for some people, they might not have to go through a big drop in September, October like we typically have. If you're going to ask me, I think our markets are going to follow the trend. I think we're going to go higher. What does that look like? Well, since I did not prep and get our charts ready, the Dow Jones Industrial Average looks like it's bouncing off of the 50-day simple moving average. We have 3 days now that we're bouncing off that 50-day simple moving average. I'm doing nothing more than following the trend. On the S&P 500, three days of bouncing off of the 50-day simple moving average. But we had a down day today. Definitely flattening, right? Still bullish, but definitely flattening. And let's look at the NASDAQ composite. NASDAQ composite had a bounce off of the 50-day simple moving average today. And finished more towards the middle of the high side. So if I'm looking at my charts, I'm going to tell you that all three of our indexes are currently bullish. The but side is, though, but they look like they're turning. It's not something you have to outguess yet. It just looks like it's turning. Still bullish. So I'm going to continue to follow the trend. And in all honesty, I really like what I see. Well, Kevin, it was kind of down today on the S&P 500, on the NASDAQ. There's no kind of down about it. We were down for a day. Markets do not move straight up and straight down. I am okay with our markets being down for a day. There really was no news. So you can't say kinda. We were down today. We might go back and test the 50-day. But no kinda, we were down. Stock markets don't move straight up and straight down. It's okay to have a bit of a breather. I would like to tell you, hey, it looks like we're building a base. We're not necessarily building a base, to be honest with you. I do not think the charts look like that. It was just a first up day after breaking the 50-day simple moving averages. It's the first down day in 4. Not so much for the NASDAQ, but we still are technically bullish. So when people ask me what I'm doing, I'm going to follow the trend. I still think September could be down 1%, but I'm just about ready to change that. GameStop and Dave & Buster's on Tuesday, Oracle, Kroger on Thursday, nothing moving the markets. As for earnings, nothing really moving the markets. Business inventories, Michigan sentiment, retail sales on Friday, but we're just following the trend, seeing where things end up. Thursday, the ECB will probably cut rates. We'll see if that's viewed as a positive. If it's viewed as a positive in Europe, we'll keep going up. How am I looking to trade? It says short term. Should say long term. And I'm looking to protect early for earnings. Pretty interesting information, and I'm just sending both sides of the fence to you on this one. The S&P chart sends you a screaming signal. Here's how to trade it. There's megaphones. I think I even used this last week, but the short answer is we could be in for a significant drop. We normally are historically in a September. This is just for you guys to read, to understand that he's going to tell you, in all honesty, 2,700 would be the downside. And the ultimate target is 2,100. So we have somewhere, in his opinion, between a 270 point to 870 point possible downside swing. And again, it's based on the inverted yield curve. Just an interesting make you feel good article. Warren Buffett says this is the ultimate test of how you lived your life. It's how people view you, and if you have friends. I really do like it. Kind of funny. Choose your life partner wisely. If you get to my age in life and nobody thinks well of you, I don't care how big your bank account is, your life is a disaster. Takes all kinds. Pretty interesting. Mike Burry, the one who called the Big Short, has a couple interesting, worrisome points he's bringing out. Because he called the Big Short a couple years early in 2008, I do want you to read through about the bubble of passive investing. Pretty interesting to see where this could crash and disappear instantly. Another one, the bubble of passive investing. What if I just put it in here twice? No. Subprime. So we have index funds and we also have the mortgage funds. I'm sorry. So I've got a couple of them in here for you guys to go through and read. Again, he called the 2008 crash correctly. So I think it's important that you guys read through it. A year after Armageddon, stock traders stare into the familiar abyss. The big call a year ago. Inverted yield curve. We're going to run into low interest rates. Oh my gosh, we're going to be in trouble. Well, it's kind of funny because here we are again. I've always tried to explain how negative interest rates can threaten the financial system. This is the article that explains it. If you want to know why negative interest rates are horrific and are not helping Europe, this is the article for you to read. It contradicts Alan Greenspan. And I always thought Alan Greenspan was the man, but this is a very, very interesting article, and this is one that I would tend to agree with 100%. Spend the time reading through and understanding why negative interest rates threaten our financial system. Excellent article and explains in general why we're worried. Apple, it's go time. Wednesday, we get new iPhones, which means the last time it happened, when it was the 5C and 5S, stock was down 2.28%. 6 and 6 Plus, it was down 0.38%. And I think that's over the next week or the next month. 6.5 and 6 Plus, 1.92% was down. The SE, we're down only 0.01. 7 Plus, 0.4%. X, 8 Plus and 8, down 0.4%. XR, XS Max down 1.24%. Pretty interesting for us to understand that usually after we have our big Apple conference, and I guess this is the event day. I'm sorry, the event day. You can see where we go, and average declines of 1.1% on top of the September loss. Average declines of 0.95% on an average loss of 1.1% on the market. So just a very interesting article to not get your hopes up in regards to Apple's Wednesday iPhone conference. Any questions, guys? Any questions you guys have for me that I can answer for you? Any questions that I can get answered from you guys? So, why do I not have puts on Apple? Very good question. The reason why I don't have puts on Apple is because Apple only moves 1%. So I still have $6 to the upside, and I just added short calls today that give me basically that 1%. So that is why I'm not running puts. It's not a big enough drop that I'm fear a volatility crush will hurt me, and I'm not interested in spending extra money on protection for a 1% drop if I can find that with a short call. Good question, Lance. Are there any other questions? Maud, I'm glad you joined us. Maud, you do have to go through the beginning of this when I get it posted later on tonight or tomorrow. I think you'll find the first 15 minutes pretty interesting. All right, guys. Hey, I want to thank you for being with me tonight. I appreciate your time. I look forward to seeing some of you tomorrow. I hope this information is helpful for you. Have a good evening, and I will talk with you again either tomorrow night or on Thursday. Good night, everyone.